Hi, welcome to this video day, which is on the 15th of December. We're on Sunday. We're just going to be looking at the Forex markets for the week ahead and picking out some pairs that we think could offer really good risk-reward trading opportunities. Now, in terms of the markets over the last few months, regular viewers will know we've been heavily focused and exposed to British pound longs. I still think the British pound is going higher. It's had a fantastic move to the upside, but I've cut back our exposure to free up capital for some other trading scenarios that I really like, and there's plenty this week. Now, there's one thing I really like in terms of trade setups, and that's exhaustion candles at or through round numbers. Always offer good risk to reward entries in our view, and there's plenty of those setups that occurred on Friday. We'll take a look at them obviously in a moment. Just before we do so, just want to make a point about the Forex markets generally, which I've made before, which is about trading in December. A lot of traders think, well, just pack up now, come back at the end of the first week of January. Probably not much will happen. Nothing could be further from the truth. This is the most volatile period of the year. Statistically, go back 50 years and you will see between now and the end of the first week of January, it's not only highly volatile, but more than 80% of Forex pairs will set their high or low for the following year in this period. So it's a very volatile time, and it's a great time to be trading and looking out for really big trend changes. And there's a few that I think are shaping up right now. Okay, right, what we'll do now is we'll go and take a look at the trade setups, but please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you can get live access to our member center, and also you can get discount on membership simply as we're coming in to Christmas for a limited period. Right, what we'll do now is take a look at the trade setup. So I'm just going to use the charts from our member center because I've just been doing my weekly analysis. So let's go and take a look at them. All right, just in our member center, just very quickly before we go and look at some charts, I'm just going to explain briefly to new viewers how we do our analysis. If you're already familiar with how we do it, just skip forward the next couple of minutes. Now, we're only going to be working off the daily charts, so the ones you're going to see. And basically, we'll set all our orders in advance, so we'll let the market do its work. We're not going to look at price action very often, just twice a day. Once in the morning when London opens up, and then we'll come back in the evening, just before New York closes, and see if we need to make any changes. So very much set and forget trading. Also, we don't use many trend lines. We only want really big levels that matter to key institutions and players in the market. So to keep our chart nice and clean, how do we find the levels? Well, we're going to look at the weekly and monthly charts, see if they back up the daily levels. That's going to make them more valid for us. And we're also going to do a study of sentiment to get a directional bias in terms of our technicals. Okay, that helps us keep the technicals very simple. Now, we do our own sentiment studies, but our favorite tool, which is totally free to help us, is the CFTC Net Traders Positions. Now, the tool itself is fantastic. It gives you real actual money positions of two key groups in the markets, the speculators and the commercials. Now, commercials are smart money. When their positions diverge significantly from speculators, we will go with the commercials. And this really helps us catch big trends. We're not after anything less than 200 pips, preferably we're after 500 pips, 1,000 or more, like we got in the British pound. And you cannot project from technicals that a pair might move 500 pips. You need to know where the big money is positioned. Okay, that is why the COT Net Traders Positions is so helpful. Like I said, it's a it's a totally free tool. I'm going to be making reference to it as we go through the video, but if you want to learn more about it, there is a video on our channel called COT Net Traders Indicator, which you can look up. Right, what we are going to do now is we're going to look at some trade setups and start with the major pairs first. Right, Euro USD daily. Just before I do my analysis, just for anyone who's a member of our site, I didn't do the PM update on Friday. I was out. Apologies. I've just updated all the charts so to reflect Friday's close, and I'll do the AM update as per usual at the normal time. Now, in terms of this pair, said it for a while, it's not the most exciting pair. We've hardly moved in the last few months. Very low volatility, but this candle here is exhaustion. We've got limited upside, and potentially we could see a big downtrend develop. But if you're doing euro shorts in this low volatility, you've got very attractive carry interest in your favor, which helps as well. This candle, exhaustion into 112, tail pokes up, no more buyers at the round number, slumps back through this previous level resistance. Red, I think go through 109, sorry, 1080 through the next round number, get clear of it. We could go off to the downside. Now, in terms of this exhaustion candle, I'd like to know why they occurred. And I think basically the reason you got that exhaustion was there was a little bit of optimism about the euro due to Brexit. In terms of the UK elections, removes uncertainty. Also, all risk currencies gained on the idea early Friday that basically there would be a trade deal phase one between the US and China. There wasn't, was there? It was just a trade truce. We slumped back. So get through 109.80, we should start gaining traction to the downside. But even if it's a slow moving sideways or down, you still got that attractive carry interest. Okay. Now, in terms of the euro, last week we had the ECB. They're going to be cutting rates even more negative. That's bearish the euro. And the economy nearly in recession. I don't see the data coming out this week being good. So it could develop into a nice downtrend, but it has been low volatility, as I keep stressing. Need to take out chart lows. If we do, could go down to 104.50. So yeah, limited upside, potentially a lot of downside. Not the most interesting pair for us, but yeah, you've got that attractive carry interest on shorts, and hopefully becomes a nice downtrend. But we'll look at more interesting pairs as we go through the report. But I know a lot of people watch Euro USD. Next pair is GBP USD. I did cover it in my video on Friday. Nice big uptrend. This for us is not exhaustion. We have come off the highs. Made the point in Friday's video, spec money is not heavily long of sterling. It'll take the opportunity to buy dips if they come. So only to this level do I see us coming back to this breakout point. I don't see us getting through the base of the candle, basically. We're going to retrace the whole Brexit decline. And I think, in terms of GBP USD, it has been the kind of trade of the year for us. And this month, just for anyone new to our videos, we've had a reasonable amount of trades stopped out. I think more this month than any other month so far. But the loss is relatively small. Then you've got the big trends that obviously cover your losses. I'm hoping, obviously this one's a rise of well over 1,000 pips. I can see another currency that could be about to make that sort of move, which we'll come to in a moment. But let's move on to the next pair, which is going to be AUD USD. I need to correct that. We're not flat. We are actually now short. In terms of AUD USD, again, not too much volatility, but risk currencies gained on the US-China trade deal optimism. And look, get a poke to these candle tail highs through a round number, can't be sustained, come back through the round number, finished clear of it. There's always, I know I stress this frequently, always a lot of order flow around round numbers. They're always worth concentrating on. And in terms of this one, I just sold the spike because I just didn't think we would carry on to the upside. So got a really nice entry. And I'm hoping we're going to see continuation to the downside. Good yield, well, a decent yield on this one in terms of carry interest in favour of the USD. I think, December, a very volatile month. I think, kind of risk on is going to peak now. You've got big problems in the repo market in terms of financial markets generally. And I think that's going to create risk off. I'm not going to go through what that means in this video. I'll do a post on my Facebook page, but I'm looking for a good move to the downside. So I think that looks a good sell. Any rallies I do not expect to be sustained. Now, excuse me, I'm losing my voice. Next pair, USD JPY. I'm looking for this now to really have a break to the downside. And I thought this would happen a few weeks ago, but we just came back up, choppy, low volatility, but we're trying to get really clear of this resistance level. And it's a big monthly resistance level. These pokes here weren't sustained. Is that the final poke? We finished blue. This is more of an indecision candle than a reversal candle. I think the level to come through is the round number, 108.80. If we get through 108.80, I think we'll really be gaining traction to the downside. Now, the yen is the currency that's going to suffer most when you get risk on, okay? And I think risk on is going to peak and the USD is going to go down. Now, also what I think is an important factor in terms of this pair is the Bank of Japan. The market expects them to ease rates. They've already indicated that they're probably not going to do that, okay? Bank of Japan Governor Kuroda says he's happy with the way things are going in the economy. He's got some fiscal stimulus from the government. He doesn't want to cut rates. He doesn't want to add the stimulus. The Bank of Japan don't. I think once the markets see that, then basically that could give the yen a real push to the upside against a number of other currencies. So I'm looking for a breakdown. We're going to get back through the 109 level, and we're still a bit underwater on this trade. So indecision candle, that hopefully this becomes a reversal. Last pair in this section is a USD card, and this one down here, a lot of commercial buying, okay? And actually, before I do this pair, I just want to skip back to the yen because I forgot something. Okay, I want to go here to the COT Net Traders positions where you can see smart money commercials. This is Japanese yen v USD. It's always foreign currency first on the COT, but when you get big divergences, you can see possibly a trend change coming. And I think here that commercials come in long and really start to buy. Specs go against them. They're really commercials try and defend this level here, which I don't think will get taken out. So I think the commercials will keep increasing their buying and specs they're selling. Now, in terms of divergences in this pair, they tend to be pretty good, actually. You've got nice divergence here between specs and commercials, and we top out there. Big commercial net long position against spec short position here. When you see the yen really push up, then over here, last December, big commercial net long position, big spec short position, big push up in the yen last December. December, a volatile month. Could we see the same again? I think possibly so. So that's kind of reinforcing my view. We're not going to get, hopefully, to our stop. If our stop was taken out, I would look for topping action into 110 and then just basically look to sell again on weakness. Right, back to USD CAD. Down here, there was a lot of commercial buying. We went long, but since then we've slumped back. Okay, now in terms of this pair, excuse me, a couple of small candles here. I just think the support level is going to hold, but if you're buying fresh, 132.20, get clear of the round number. Okay, now I think we should gravitate to the upside. The CAD, speculators like it against a number of other currencies as well. Specs pretty long of the CAD. But I think risk on is peaking. I've also said in previous videos that I think market too optimistic about the Bank of Canada holding rates through to mid next year. Their economy has peaked, and basically they'll cut rates before then. So look for the breakout. I just want to go over and look at Euro JPY daily chart. Now, over the last year, we saw a really big fall in the euro. If you look at the monthly chart, the euro has mounted a really decent rally. I thought the rally would peak out here, but we just travelled sideways and then bang up with that tail. Now, in terms of that tail, it's exhaustion. Okay, and we've just sold into this level of resistance here, stop back behind this level of resistance, come straight back, and I think we'll be going to the downside. Now, just under 100 pips in terms of selling that, we got stopped out on that blue, which cost us just around 100 pips. No, 120 pips, I think it was. So we're just getting back our loss, but I just really like the look of that reversal. I think that could be decisive in favour of the yen. So follow through selling. I think we could be going nicely to the downside. Now, what I want to do now is go and look at 4 pairs that particularly interest me. So we're going to skip over and look at our guest pair section. AUD, this is a pair from our guest pair section of the website. And I did cover the GBP on Friday, but I didn't cover GBP AUD. A few people are asking me my opinion, so I'll just give it very quickly here. Obviously, like all British pound pairs, a nice big strong up move, big strong blue candle off the highs on Friday, but I don't see much downside in this pair. 192.30, this level here would be a good level to look to buy off. Okay, if we did for some reason sell off through 192, come back in at 192.30, or on any signs of bullish action into the bottom of the candle, I don't think we're going to retrace style candle. I think here, possibly towards this first level. Long way to go on the upside in this pair. I've got 2. I'm probably going to extend that to 205. If we get to 2, it'll be another 600 pips. Obviously more if we get to 205. It's a big trend in motion. I think it's got far further to run. Okay, fundamentals favour the GBP. And GBP is going to retrace its whole Brexit decline. If we get risk off as well, that's going to favour the GBP. I think there's probably more potential upside in the GBP on the commodity currencies than on the USD. But GBP still bullish longer term. CAD JPY. This is a pair that's kind of, when I say disappointed me, they very often do. We came up here strongly and sold off. I thought we would continue to the downside. But it's just choppy, sideways, then another move up. This candle, though, I think could be warning of exhaustion. A tail into previous resistance, which is just clear of the round number at 83. And we come back below the round number. I think we need to come in below the, or fresh positions come in below the low. I'm already in. I came in a little bit aggressively. 82.65. Break 82.65. Hopefully we'll be going to the downside. Commercial smart money short the CAD pretty heavily. Specs long. CAD most overbought major in our view. Yen bad news in the price. So looking for this one possibly next week to confirm a nice move to the downside. USD MXN. Now this pair is interesting in terms of, we covered it in a few videos. We did take it long there, got stopped out. I thought it was a good buy, but just kept on selling off to the downside. Should have bought it, shouldn't I? But where it is now, I just think it's a really great buy. You've got a near record net short position held by speculators, the big commercial long position against it. We held 19 on Friday, but we're red. Okay, I'm looking for a move back through. really need to get back through the level I've entered at. 1906.30, we're at, what are we, 1902.82 on Friday. Need to get back through that level. If we go through this level should be really strong support. It's a really good risk to reward trade if it comes off, of course. My view is this is a real barometer of risk on in terms of trade, deal, optimism, push the USD down is just a truce. So I'm looking for the GBP now to move up, hit the spec stops. If we can start hitting the spec stops, it'll be a bit like dominoes, hopefully, back up towards chart highs, but certainly looking for 1960, 1980 in between. That good risk reward trade. We'll see how that one pans out next week. Featured this in a video, USD SEK. I've got quite a big position on this, and nice reversal blue on the day finishes. This tail cannot take out this major support. Stops back from that level as well, giving it a little bit of room. Come through here, a lot of spec short. We should gravitate back up. At least the first level resistance, possibly up to chart highs. The full logic and reasoning of this trade is in the video that I did yesterday. You can go and check it out. Now, what I want to do is finish up with just a few more USD pairs and JPY pairs. So we'll shift over and take a look at them. Right, just on a pair that I think you should keep an eye on, even if you don't trade it. It's USD CNH, US dollar offshore spot Chinese yuan, because it really kind of shows the peaking of optimism about the US-China trade deal. When, market's expecting a deal, dollar pushed down, it's just the truth, dollar back up. Think if the dollar can get through the high, up to chart highs, and stop could be behind first level support. We could take out that high. The risk currencies now for us are going down, which I think I've probably made clear as we've gone through the video. So it's always worth keeping your eye on this one in relation to trade wars. Let's skip over to the next pair that we want to look at, which is USD CZK, US dollar Czech krona. It's a euro proxy. Regular viewers know we like trading euro proxies. Big round number here, also weekly support, 2280, exhaustion, but we're still red. But it's a warning that we could go higher, and selling is exhausted. Get through 23. We should be off the upside, and then on follow on, we're looking to monthly resistance. Sorry, not support. USD PLN, very similar trade setup. You tend to find when the euro's going down hard, the proxies go down harder, and it's the reverse if the euro is going up. We think the euro is going down. We like to look at both these pairs. We're going to do them as a split trade. Just need to get through 23. I won't show USD PLN, just a very similar trade setup, but we like the look of it. Where are we going next? We're going to NZD USD. I think this looks good. This candle tail here pokes through a round number. It just gets clear of the round number, then slumps back below it. Just now need to get clear of the round number through 65.70, and then I think we'll be off to the downside. We're already in this one, and for fresh positions, 65.70. This trade looks really nice to us. We think 67, which is also weekly resistance, is going to be pretty firm, and we could see a nice move to the downside. Bit similar to AUD USD. Both pairs look good. Last pair I'm going to look at is going to be AUD JPY. Obviously we like CAD JPY. AUD JPY looks good as well, because come here, it's a level of resistance. Just kind of come up to it again, get through it, poke, hit a round number, big strong resistance, no more buying, slump back just to above the next round number. Now, from our perspective, all we need to see now is just come through 74.80, and then we should be off to the downside. But if we rally back, this is strong resistance. You can see what I've done. I've literally just come off the round number. Really strong resistance. Just wait for it to slump back a little bit away, come in short. Now looking, hopefully, for this level to break, follow on to the downside. Also, NZD JPY looks good. I won't show that in this video. It's very similar trade setup. So you've got plenty of kind of exhaustion candles, being rejected at round numbers or just poking through and coming back. And risk on for us has probably peaked. Now, I've said it earlier, I think, JPY been a bit disappointing for us over the last month because we thought, the JPY would have firmed sooner and didn't. But, now the bad news is in and the yen could gain real traction to the upside. And I think, if we look at the global economy, there's been optimism about, trade wars being solved. They're not. There's optimism. The global economy is turning around. It isn't. Clear from the data. Problems in the repo market. Stocks at bubble levels. We're in December, a traditionally volatile month. I think we could easily move to risk off. Some USD pairs look really good as well. We've still got our GBP longs, but less exposure now, putting in a little bit more in terms of JPY and USD longs. And I think I said it earlier in this video, over the last few weeks, you had a reasonable amount of stop outs. I mean, relatively small losses. If you're new to Forex trade, never worry about getting stopped off. If you keep your losses small, you will get those big winners. Okay, the British pound for us was a bit lucky, but the British pound just basically made our year. And we're hoping that the yen is going to do something similar and the USD as we move forward. It's going to be an interesting month for sure. We will update in future videos, and of course you can follow our views in our member centre as well. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.